What's up, guys? It's Tickers and Tokens here, back with another video. In today's video, guys, I want to talk to you about the indices, more specifically the Dow Jones, the NASDAQ, and the S&P 500, and help you try to figure out which one you might want to invest in. Now, you can invest in all three, and I think that's a fantastic idea. They're all wonderful indices, with each with their own strengths and weaknesses. So there's plenty of reasons to do it. Pick either one, mix a blend of them. So, let's start with the S&P because that's the one everybody probably knows. It's trading at around 3,600 right now. It consists of the 500 largest companies in the world, more specifically the United States. It is one of the most commonly followed equity indices. Yep, that sounds about right. It includes all the names you've heard of: your Apples, your Googles, your Walmarts, your every stock you've ever heard of. Pretty much is probably in the S&P. And it returns at around a 10% average year over year. If you take a look at the max chart, it's up 2,500% since 1982, so about 40 years, and it's almost 25, 26 extra money. That's not bad, man. For 40 years. I mean, there's better returns out there. We'll get into that, but this is a good, solid strategy. This is what you usually would put into your retirement account. Just throw it in there, forget about it. And you can say it's pretty similar for the Dow Jones. It's right around 30,000 at time of recording. Don't let these prices scare you, by the way. You don't have to own a whole share at a time. We got fractional investing now where you can just buy pieces of shares at a time, and then you can slowly build your way up to one. Dow Jones, the Dow Jones Industrial Average, or simply just the Dow. Stock market index of the 30 prominent companies listed on stock exchanges in the United States. So basically, it's a more condensed version of the S&P. It tracks the 30 biggest stocks instead of the biggest 500. So ideally, you should expect to see more returns out of it. So yeah, if you on the same time frame as the S&P, it's slightly outperformed, but that slight outperformance leads to extra 2 or 3x on your money. So that's hard to argue with. And we got the NASDAQ. So the NASDAQ's the one that's the most interesting in my opinion because it features a lot of the big companies too. But its main focus is the NASDAQ 100 at least is focused on things that aren't like financials or things mostly just not financials. It includes things like technologies, services, cyclicals, healthcare. Is anything mostly big tech? The biggest allocation of it goes to big tech. All the major tech companies are like 50% of like the NASDAQ 100. It's not that maybe that extreme, but if you look at how all of these indices have performed over time, you see you got the Dow Jones in light blue. Dow Jones in dark blue, S&P in light blue. You got the NASDAQ in yellow. You can see the Dow and S&P tend to kind of hang out with each other quite a bit. All of them you see have been fantastic investments over the long term. You could have picked any of them, and you would have been just fine. But you see here lately, in the past about 5 to 6, 7 years, the NASDAQ has really just kind of ran away with the whole show. It's finally starting to come back down to reality. So can we see this outperformance in the future? Maybe, maybe not. Because keep in mind, the only other time the NASDAQ has massively outperformed like this was during the dot-com era. You've seen it come all the way back down. And it didn't reach that high again until, what was this, 2014, 13, 2012? So call it at least 10 years. Yeah, you can see a 10-year period in the NASDAQ where it just doesn't budge back to all-time highs. So that's something to keep very well in mind, that just because NASDAQ looks good now doesn't mean it'll do very well later. There's investments past returns doesn't lead to future returns. If you ever heard that saying, it's definitely true here. Overall, all the indices are great. They're fantastic investments. Like I said, you can't go wrong in any of them. Just if you wanted to be the most diversified, S&P 500 is probably your best bet. Just expect smaller returns over time because you're spreading out your risk, and the more you spread out your risk, the more you spread out your returns. So you're not going to get as much as you would by going into the high-flying NASDAQ. But you can also lose a lot more on the NASDAQ, as you can clearly see. So there's risk to be taken into it. I believe the Dow Jones has the strongest dividends of them because it's more industrials and more big cap profitable companies that can really pay you a strong dividend. It's not too diluted like the S&P with a whole bunch of companies that don't pay dividends that really bring down the dividend total. So if you're looking for a growth slash dividend, this should be like the stalwart of it. Yeah, the Dow Jones. It's going to grow. It's going to pay dividends. It's going to do both, but very slowly. So maybe you can blend the two of these to get more growth. If you want just pure growth, your Nasdaq's your best bet. It's like I said, not the safest, but it's been a strong performer. You can count on it. It'll probably go down a lot, so be prepared for volatility, especially here lately, because these big tech stocks and all these large caps have just been getting hammered. This is a really good time to buy, in my opinion. Not financial advice, but I think if you really care about these stocks and you really believe in them long term, or care about these indices too, they're not going nowhere. The stock market's been around for 200, 250, almost 300 years now. It's not going nowhere. Every time it recovers, every time you get a major crash like this, you can see they're all just been blips on there. Even just the dot-com bubble I was just talking about right here. You got your '08 recession right here. It just looks like a blip on the radar now. I mean, if you were around for that, you remember it was the end of the world. It was everybody's pants was on fire, everybody's shirt was on fire, everybody's house was on fire. It was just bad. Nobody wanted to be in the markets. Nobody wanted to be in the economy. Everybody wanted to just flee to another planet when it happened. And look, just a blip in the radar now. Just a small little road bump right there. And we just had a pure decade of just unrelenting growth. Now we got the interest rates going back up again. The stock market's coming back down. As long as we got these interest rates coming up, y'all, well, we're going to have some pain in the markets. But it'll be okay. We have to be just learn to live with it. Got to get past it. If you're a new investor, don't get spooked by the volatility. It's normal, especially in situations like this where the economy's getting really bad, inflation's really high, interest rates are going up to match it. One of them's got to yield. One of them's got to yield for the yield. They make little jokes out here. But yeah, guys, you take a swing at all three. If you're new to this, just stay with it. You got to keep a long-term mindset. We're talking decades here, so keep that in mind. You see a lot of volatility short-term, but long-term these things tend to average out. I could throw Bitcoin up here if y'all want to see. Y'all want to see Bitcoin just leave all of this in dust, but that's a different video for a different day. Bitcoin's a little bit risky if you're not used to the volatility, but just invest in what you believe in long-term. You find companies you like, invest in those too. But if you want to be safe and you just want to make a good, consistent return, all the indices are fine, really. You're more likely to get more returns out of the NASDAQ, but it's more volatile. The S&P 500, good growth, good dividends, nice and slow and steady. Throw in your retirement account, forget about it. Dow Jones, you get a little more aggressive, but not going to be as high-flying as the NASDAQ. It's like a perfect blend between the two. So that's all I got for you guys in today's video. Please like and subscribe if you enjoyed it, and leave me in the comments down below if you got any ideas for a future video. And I will gladly answer any questions in the comments. And this has been Tiggers and Tokens. Really enjoyed making this video for y'all. This is me signing off. Peace, guys.